Welcome to Bit by Bitcoin. It's your host, Dylan Loomis. So in this episode, we're going to hear from the CoinShares co-founder and CEO. If you're not familiar, they can be thought of like a hedge fund for digital currency. They have created ETPs or exchange traded products just like ETFs that offer access to investors to the digital currency space through the traditional finance system of banks and brokers. But for those of us in the United States, they are only in Europe for now, so we'll have to look elsewhere for investments like this. CoinShares manages about $4 billion and they are the world's first regulated digital currency hedge fund. He does mention some really important topics and I'll chime in to add some context just to make sure you understand what he's saying.
Jean-Marie Monetti, CoinShares CEO. CoinShares, by the way, seeing record inflows in its Bitcoin-related products, ETPs, and other services in early year. Jean-Marie, welcome to the program. I know you gave an update a few weeks ago. How much in assets are you adding every week? Can you tell us?
Like CoinShares hit a record high, Brian. Nice to be here. To answer your question very directly, CoinShares hit an all-time high record of AUM of $3.9 billion in the first few weeks of January.
Okay, so we're seeing a huge amount of interest. Is that mostly, Jean-Marie, from the institutional side or from the retail investor side, or fairly evenly split?
Well, it's a very interesting question because I've been trading cryptocurrency since 2013 in various incarnations through a first hedge fund regulated with my partner Danny Masters, and then through CoinShares, through our ETPs program. And through this journey, we have seen the demand completely shifting from a very retail-driven demand, mainly trading in Asia, to something moving much more to the US and to Europe, and progressively graduating towards what could be qualified as, I would say, institutional demand. There is a lot of data point out there. You get Skybridge breaking the internet on the first conference call with investors. You get the fixed income CIO of BlackRock making a very strong point about Bitcoin allocation for the new generation, how it will replace gold. Even if Jeff Curry this morning from Goldman was doing a bit of a different approach, the thematic is still very strong. And then you get Citi giving very strong, like 300 grand kind of price valuation on Bitcoin. And finally, you get very conservative house like Ruffer in the UK also allocating to Bitcoin. So the demand is very shifting and starting to permeate into very traditional investor.
So as he mentioned, Skybridge is just an investment firm that has invested about $180 million into Bitcoin, and their fund as a whole has about $10 billion in assets under management. They're also looking to launch a Bitcoin-specific fund, but once again, you'll have to pump the brakes unless you can pony up $50,000, as that's the minimum investment required. But you guys will start to see a very critical theme here, and it's as these dominoes in the institutional investment world continue to fall, this has massive implications for the price of Bitcoin. And just a few weeks ago, you had BlackRock's CIO, Chief Investment Officer Rick Rieder, say that crypto was here to stay and that he thinks crypto could take over to a large extent the place of gold because it's so much more functional than passing gold bars around. And in case you haven't looked it up yet, the market cap of gold is currently about $10 trillion. We also had recently a senior analyst at Citibank, Tom Fitzpatrick, who actually wrote an entire report on Bitcoin and his thoughts, and he put a $318,000 price target on Bitcoin for 2021. He cited many things in the report, but one of the main themes was the money printing that the Federal Reserve is doing with quantitative easing, as we literally just talked about in one of our previous episodes. And then we have Ruffer, a UK-based investment firm that put 2.5% of their $27 billion in assets into Bitcoin. This transaction actually took place on Coinbase, the main exchange that newbies use to buy crypto. So it's clearly not just newbie fish that are buying crypto on Coinbase. The investment firm said that the macro environment is set up perfectly for an asset that blends the benefits of both technology and gold. And I love this statement.
Let me, because I want to get this in. If the Dow fell 4,000 points a day and then rose 4,000 points the next day for a number of days, people would probably get spooked and say, what's going on with stocks? Bitcoin has been doing that and nobody seems to care. I know the idea of Bitcoin, by the way, is that it's independent and uncontrollable, but I do wonder, with 18.5 million coins or so mined, only 21 million ever, and big institutions stepping in, are you worried that it can be sort of semi-artificially bullied around by big hedge funds?
I don't think it's bullied around, but we're going to run out. We have, if you just take a single metrics, we have 21 million coins fully diluted. A lot of them have been lost already. And just in the US and North America, you have 21 million millionaires. So there's not enough one for each of you. So, at a global scale, we have a bit of an offer and demand imbalance here, which is manifesting by, this demand we can see in the market. There is time weighting algorithm buying every single dip at the moment in the market. In the past, when the market was tanking, it was staying there for a while because there was no more demand. Now there is people waiting for this move to just enter the market and start allocating.
And so what Jean-Marie said about lost Bitcoin is actually super important and somewhat overlooked. The New York Times actually put out a report recently using some data from Chain Analysis saying that they think 20% of all of the Bitcoin in circulation, or existence to be technical, which is about 18.6 million Bitcoin, is lost or on inaccessible wallets. Doing some quick math, that would be about 3.7 million Bitcoin that are lost forever, basically gone, that will never be accessed. The value of that would be $140 billion. I cannot even imagine having even a fraction of that lost. But this is a great reminder, if you are going to move your Bitcoin or crypto from an exchange to a cold wallet, send a little bit first, learn the process, make sure you do it properly. I will have a video on this coming up, so be sure to subscribe if you'd like to see that. I think it's pretty self-explanatory why these institutional investors coming into the Bitcoin world is so important. But as we just saw with Bitcoin hitting 40K, pulling back quickly all the way down to 30K, it bounced right back up like a trampoline, hitting 40K again. A big part of this we can assume is from the institutional investors buying the dips and having stronger hands that are actually holding this Bitcoin. Because I can tell you one thing, these big money investment firms, hedge funds, they're not looking to buy Bitcoin and then sell it a couple weeks later. They typically buy and hold for the long term. That's just how these portfolios work. Yes, they'll buy and sell to keep allocations under certain percentages based on their portfolio allocations. But if anything, these firms are going to be looking to buy every dip that they can to continually add to their position. So like I said, as long as these institutional investors stay strong and the dominoes keep falling, which all data is indicating is going to be the case, these dips and the pullbacks in the price of Bitcoin will not last as long as they have in years past.
And there's so much correlation in the price moves, Jean-Marie, and it's not just between, maybe I'll call it the big 4 or 5, the ones you guys deal in. You've got Bitcoin, Ethereum, Litecoin, XRP, others. Those are really the big 4 or 5, but there's 40 or 50 cryptos that get traded and get a lot of attention on even some of the smaller exchanges. They tend to move together, even though they are very different program languages in some cases, very different purposes. Some of them are like Bitcoin being turned into a currency, while others like Ethereum, a currency on the blockchain platform for Ether. Is there one that you personally favor over the others, or that your clients seem to favor over the others, or is it really just all about Bitcoin?
Look, I think CoinShares a couple of years ago did a very good piece about the portfolio allocation in the digital asset sphere and what kind of value added you get in diversification. The truth in the matter is there is a strong concentration in liquidity in the top pairs that you were mentioning, and our client will, and many institutions will also favor liquidity in the allocation decision. So Bitcoin, Ethereum will always win in terms of size and trade ticket versus a Ripple or something.
But of course, the institutional money coming into Bitcoin will be a theme that we continually cover on this channel, so make sure you subscribe for all of that. I thank you guys for watching this video. Please like it if you did, it really helps. And with that, I look forward to seeing you in the next video. I hope that you have a great day. Or it was government and the Fed, and it becomes a firm's head